Hey everybody, this is Diggy from ForexHabits.com. Today it is 16 April 2013. It's Tuesday. It's actually 1 o'clock in the morning and I can't sleep and I'm excited, so I just thought I'd do a little market screencast and upload it to YouTube to give all of you some ideas and insight to my perspective on the markets, which is quite often correct without sounding arrogant. Anyway, let's have a look at what's been going on, because this world and these markets have been totally crazy the last week. If you take a look at what has happened to gold, gold has collapsed from about 1550 to 1350 in a matter of like 2 days. It's really dumped, and don't know exactly what the reasoning is. I mean, it's been in a bull market for 10 years. Yes, the technicals have shown it's been in a consolidation pattern and it's dropped below that pattern and it's just dumped. Also, there's the Cyprus issue where they might need to sell $6 billion worth of gold to pay their debts, so maybe that created kind of a flood to the market, because they think that possibly there's going to be a ton of gold coming onto the market and it's just going to drop in price, so people are getting out. I don't know what the situation is. Anyway, the situation is that gold has really dropped. I mean, this is a 4-hourly chart and we are low. We haven't had a drop like this in a long time in gold, and we're actually at the lowest level in multiple years. Let's take a look at the daily chart. You can see how this has just collapsed. I mean, this hasn't happened for a very long time. We take a look at the weekly chart. What has happened here is that we've just totally broken out of this kind of wedge. We had this wedge that was forming here, as you can see, and we kind of tested that. You can see here with this weekly candle, it went exactly to the wedge. We had this triangle wedge, and should it have broken to the upside, we could have continued to the top. But you can see after a clear break of this wedge, it just collapsed and it went down. And this is looking like it is the beginning of a significant correction. Yes, $200 in a matter of 2 days is already a significant correction, but if you take it in terms of the last 10 years, how we've just been going up in gold, and we've gone up from like 300 to almost 2,000, you could say that it is quite possible to actually expect a 50% correction, meaning gold could probably go back to somewhere between 1,000 and 800 over the coming weeks, months, if this continues. Yes, maybe we'll get a consolidation and we will go up to fill that gap, and we'll go back to 1,500 or so, possibly even test the breakout point of this wedge. But in the coming weeks and months, gold should head significantly lower towards 1,000 or 800. When it gets to those levels and it bottoms out and it's kind of done with its whole correction, then we're going to be looking to buy gold, because gold is something that we're definitely going to keep for the long term, because it will go up back to $2,000 an ounce again, and it will go up far beyond that in the next years. So we welcome this correction, because it is going to create the perception that gold is going to be totally worthless. Not right now. This is going to take a couple of weeks, maybe a couple of months. As it continues to drop, it goes back to 1,000, it goes back to 800. People are going to start talking about how gold is a bad investment, how you should stay away from gold, how you shouldn't buy gold. And when you start hearing those kind of things, that's when it's time to buy gold, because that's when it's going to go up like 100% over the next couple of years. So this is something that we're going to keep watching. We're going to see if we can do any trades on gold. Should it do a correction back up to 1,500, we are going to go short. And if it doesn't, we're just going to watch it for the next few weeks or few months until it gets to a base level, bottoms out, and then we're going to look to go long. Now, the same thing has happened to the Euro Japanese yen. This is a totally crazy price action chart again. I created a video, I think about a week and a half back, when we were at this level at around 119. I think that was on the Friday, and I said we were going to go to 130 very likely. So that's exactly what happened. We had this huge rally. We shot up to, I think, just shy of 131. Oh, we did actually hit 131, 131.25. And after we hit that, it's just crashed down all the way back to 125. So that's like 1,100 pips up, 600 pips down. The moves in this yen is absolutely crazy. And yes, you can try and trade it short term, but if you got caught on the wrong end, I did a couple bad trades on this one. Of course, I stuck to my 2.5% rule, so it's not really a problem. But you get stopped out so quickly with these kind of huge fluctuations that it's very difficult to choose your entry. And what's going to happen now with the Euro Japanese yen is something that we're just going to have to wait and see. Are we going to indeed continue with this crazy crazy kind of price action, or we're kind of going to stabilize and get back to normal. Ultimately, I would still like to see a run up to the 2008 highs, which were around 139, 140. If we can get there, it will definitely be good for a short. You can see over here that with these highs, since this whole consolidation, we've had this huge rally from the 94 all the way up to 127, back down to 119, up to 131, down to 125. And if all goes well, we should consolidate in this area. If it does what the charts do, then we shouldn't go back down below 119. We go down below 119, we're going to head significantly lower again. Right now, I do expect this consolidation, so up and down, possibly down to 123, somewhere around there. And in the next weeks, this Euro Japanese yen could possibly go higher. But again, on the daily chart, what we have here is a negative divergence, and you know I'm a big fan of negative divergences because they just work so well. So what we have here again, we have this high over here, a high in the RSI. We have a higher high in the price action, but a lower high in the RSI, which is a non-confirmation. So should we continue to break down, should we head towards this level of 123, 122, 121, and should we eventually get below this double bottom here at 119, that would be a nice area to see what happens, to be able to either go short if it breaks through it and follow it down for a couple of hundred pips, or to see what happens around this trend line at around 123, 122 to see if it's worth going long. But personally, I wouldn't really get too involved with this one at the moment. Euro US dollar, it's been kind of holding steady. It's just been fluctuating around this 130, 131 level. This is a 4-hourly chart, so we can put this on a daily chart. And you can see what's kind of been happening here. We had this rally up from 127.50. We went all the way back up to 131.50. I said it was quite possible to go to 131.80. We went to 131.50, so close enough. We're going to see, are we going to get a consolidation and a further up move, or are we done with this little move and are we going to come crashing back down, which is quite a realistic possibility to come back down. Again, you can see that the actual trend, I think, is still down, and there is still danger to the downside, and we're still under these moving averages. So this was this 131.80 level, kind of where I said we'd go to. So what we're looking for is we're going to look for some topping action and possibly shorts on the Euro US dollar. Now, what's been happening here, the US markets, they've also come down significantly. The S&P 500 has finally, like I've been kind of expecting, it's gone to the old high of 1576. It surpassed that. It's gone to 1595, 1597, somewhere around there, and it's dropped back about 50 points since the high. And that is something that I've been expecting because that just seems so likely to happen. We made a slightly higher high, and it's very possible that we've just had the all-time top now for the significant future, and we're just going to head back down. Yes, we may still consolidate here. We may still go up 20 or 30 points. We may even go up to 1600 again, but I actually don't think we're going to go above 1600, and I think we're going to head down a couple hundred points over the next weeks or months. You can see this divergence is forming just like in the Euro Japanese yen. We've had this higher high, we've had this lower low, and we're going to head down. So we're going to look to short this. I was short already from I think 1365. I took a nice 15 point short here. I exited at about 1552, 1551 right now. And what we're looking to do is we are looking to go short on any little bounce. So should we go back up to 1560, 1570, we're looking to short. We're going to put a stop above that high of 1600, and we're just going to hold this because this is going to go down. In my opinion, I think anywhere to 1350 to even 1100, and should that happen eventually, maybe we'll turn over into a bear market and we will go sub 1000 again, which is something that will happen, whether it happens now or in a couple months from now. That is going to happen, in my opinion. The same with the Nasdaq. We just had this big kind of rally. This is a weekly chart. We can move it to a daily chart. We just had this rally, but we're grinding. You can see how we're grinding up all these chop, and slightly higher, but so many days in the same kind of range, just grinding higher, while the RSI is still just grinding lower, and we are not getting anywhere. We're creating this negative divergence. We got up to this point of 2867, somewhere around there, and then we just came back down another good 60-70 points from the high already on the Nasdaq. And like I've been saying on the monthly chart for the last couple of weeks, I think the Nasdaq will head down towards the 2000 level, probably lower. The same with the Dow Jones. I mean, all the US markets work the same. We had a big rally towards the top. We had almost 15,000 on the Dow, all-time high, of course, and we've dropped back down a couple hundred points. And when this reverses, which I think it will do pretty imminently, if it hasn't already done so, and if it hasn't already set the high, we should head back towards about 13,000 on the Dow, which is 1,500 points. Should we break that, then there is a lot lower. We could head back towards 10,000 or lower on the Dow, which I do think is something that's going to happen this year. That's my opinion based on all these things. So there you have it. It is all been moving like crazy. We've all set in all these new highs in the US markets. The euro, Japanese yen has gone crazy. Gold has collapsed. There's just significant price movement in all these pairs. And if you're not trading carefully, you are going to get hurt, very hurt. You need to put in your stops before you place the trade. When you place the trade, the stops need to be in, and you need to risk a maximum of 2.5% per trading day. So you cannot be risking 2.5% per trade if you have 10 trades open, because that means you can possibly lose 25%, and that is way too big a loss. You just need to be able to lose maximum 2.5% over all your trades, open trades, on a single trading day, and you just need to keep up with the technical analysis and stick to it, because that's the only way that you're going to get out ahead. I mean, if you're holding gold and you forgot to put a stop and you were long gold and gold drops 200 points in 2 days, and you come back, you check the markets, you can have a huge loss, if not a wiped out account, and that is not something that you want. So if you want to learn how to trade profitably, even in these crazy markets with these huge fluctuations, if you want to manage your account, protect your money, if you want to know how to pick the right trades that have personally made me 30% this month, that continue to make me 10% or more every single month, check out my personal coaching. I would love to help you on a one-on-one basis. forexhabits.com/coaching. And there's something very new and special if you go to forexhabits.com/VIP. It's a trading signal service that I am in the process of launching, which basically means that you sign up. It's a monthly fee. The first month is going to be ridiculously cheap, so that you can see how well my trades actually work. And you basically just sit down, relax. You get my notifications via email or via SMS for the trades. You take the trade. You risk maximum 2.5% on the trade. You risk the same amount for every single trade, and you just sit back, and the chance is very high that you're going to make 10% or more every single month return without having to do any analysis yourself. You basically just follow my analysis. And like I said, this month I'm up close to 30% already in the last 4 weeks, just based on risking no more than 2.5%, and that is it. So I hope to hear from you soon. Hope you check out the sites, the URLs, forexhabits.com/coaching, forexhabits.com/VIP. Subscribe to this channel, give it a thumbs up, leave me a comment. I'm always here for you guys. Cheers.